YouTube channel. Welcome back to a brand new video. Today we're going to take a look at the NZDUSD, the QE against the USD from a technical, order flow, fundamental and sentiment perspective. Now starting here with the technical data from the monthly time frame, what can we see? Now we can see how the NZDUSD had broken above this level of resistance. Now all of this resistance has now become support, and we can see how the market is testing and rejecting that level. Now we can also see how the market had printed this massive impulse, and after an impulse you expect a correction. Now the way you measure that correction is quite simple. Take your Fibonacci from the high to the low of the impulse, and we can see how the market had not retraced back to the 0.382, which lines up perfectly with that level of support that we had over there that got broken. So we can expect the market to pull back and test the 0.382 Fibonacci level if it wants to continue lower. Now on the weekly time frame, what can we see? Now we can see how the 0.382 is not only the perfect level that lines up with the structure and the first Fibonacci level, but we can also see how the market had printed this W formation, and there's a good opportunity for us to take a buy to the neckline because technicals teaches us that once the market prints an information, you can expect to pull back to the neckline before the market continue lower. Now dropping down on the daily time frame, what do we have? Now we can see here from a daily perspective that the market is about to test a level of resistance. Now once the market hits this resistance, we can expect the market to pull back from that level before continuing lower. In doing so, the market would print an equal high. We'll have this left shoulder, the head and the right shoulder over there, and that is a bullish pattern from a technical perspective. So what we're going to do is we're going to wait for the market to hit that level, pull back to this level before continuing higher. Also measuring this retracement is we will have a perfect retracement to the 61.8 Fibonacci tool. Now looking at the order flow data, so commitment of traders, so what the biggest banks, hedge funds and institutions are doing in the market. Firstly, we can see based off the last report how hedge funds closed over 18k long positions. So they closed over 18,000 long positions, and they also closed 1,773 short positions. The overall net positions had decreased, but we could obviously see that last week we had this massive red candles that printed. This week's report is not available yet, but one thing I can tell you, when this report comes out this week, we can definitely expect some positive data we can expect some positive data for the NZD, or we can expect hedge funds to increase have increased their long positions. Okay, so the next thing we're going to look at is the fundamental data that we have. Now you can see here that we had some news while we were asleep, and this article comes from the Daily FX. It says here this morning the ANZ, or the New Zealand Bank, releases December consumer confidence survey results, with the index showing an increase to 98.3 from 98.6. So there was a 1.8% increase. So on a month-to-month basis, the survey showed virtually no change for inflation expectation, which is good, but expectations on house prices fell to 5.3. But overall, the data is still positive for the Kiwi economy. Now, one thing you need to keep in mind is that fundamental drives the long-term momentum of the market, and technical data drives the short-term momentum of the market. So the long-term outlook is still quite bullish. However, there's one thing that we need to take into consideration that says here, but the Omicron variants represent a big question. Now we know that the Omicron is considered a big risk, not just for the NZD, but across all major currencies. And we can also see how the NZD has been quite oversold over here. So a pullback is expected in the market. Now, one thing that we need to take into consideration is that we do have the core PCE or the price index coming out for the US dollar on Thursday. So that's also something that needs to be taken into consideration. But the best way to approach the situation from here is wait for the market to go and test that level over there. Then on the pullback, you can start looking for potential buying opportunities for the market to complete this information that we've identified from a weekly perspective. Also, back to the 0.382 as we identified on the monthly perspective there as well. Now, as always, guys, if you enjoyed the video, don't forget to smash that like button. If you are new here, just smash that subscribe button. Just smash that subscribe button. So I'd like to have you a subscriber because I do upload new daily content each and every day. And let me know down in the comments below what video it is that you would like to cover, or that you would like for me to cover next. Also, like I said, once we get to 1,000 subs, not am I only going to release the strategy, but I'm also going to select 2 people to join the lifetime mentorship program at no cost, absolutely free. And I'm also going to give 2 people an opportunity to join my signal group as well, no cost. So that's the giveaway once we get to 1,000 subs. So get smashing on that like button, share the video, because it's really going to help drive the algorithm behind YouTube. Thank you. Cheers. 3 years.